Hi there traders, this is Steve Miley, the market chartist for FX Explained, and our regular weekly MacroWatch update for the week commencing the 10th of January 2022. Higher yields and hawkish Fed sends stocks lower. Let's take a look first of all at those macroeconomic and geopolitical developments for last week, the first week of 2022. Well, 2022 kicked off with a continuation of the latter 2021 theme of rising concerns of global inflationary pressures. And this saw a rise in not just US bond yields, but in global bond yields, particularly in the major economic centers. This higher yield theme was reinforced by the release of the minutes from the December meeting of the FOMC, which saw an even more hawkish tone from the Fed than had been anticipated from the statement and press conference back in December. The higher yield theme and more hawkish expectations from central banks in 2022 weighed primarily on the US tech sector, which pulled the Nasdaq significantly lower last week. And Friday's US employment report was mixed, with the non-farm payroll element less than expected, but the unemployment rate lower than consensus forecasts. And ongoing concerns that the Omicron strain of COVID-19 could further contribute to supply chain disruptions and weigh on global economic growth have also weighed on riskier assets. Let's now take a look at the global financial market developments for the week ending the 7th of January 2022. So as we've already said in here, US yields and global yields shooting higher. US yields pushing above the yield peaks in here from 2021 and signalling threat for still higher yields going into January and on through 2022. This, as we said already, has already hit the Nasdaq significantly, and a potential bigger topping pattern emerging on the Nasdaq. And the broader indices also pulled lower in here, dipping lower here, the S&P 500 and also European stock averages looking more vulnerable. The US dollar was mixed, so US dollar losing ground in here to the euro, but benefiting and rallying against the yen. But significantly, the risk currencies, the Australian and New Zealand dollar, were notably lower against the US dollar. Gold signaled a more negative tone with the kind of broader US dollar strength that we saw. And oil continues to push higher in here with concerns around supply and ongoing inflationary pressures pushing up the price of crude. And COMEX in here, copper, was somewhat sideways, still within a consolidation theme to start off the year, but benefiting from the strong rebound that we saw at the end of last year, so positive in a wider range. Now let's take a look at the week ahead, commencing 10th of January 2022. Well, we're going to continue to watch for more details of the Omicron strain of COVID-19 and any potential lockdown issues and further restrictions amongst the major global economies. On the central bank, it's a fairly quiet week. No central bank activity of note, but Fed Chairman Powell does testify to Congress on Tuesday, and given the inflationary pressures, given the more hawkish tone from the Fed meeting minutes from December, we're certainly going to be watching what he has to say. And on the data front, we have the EU unemployment rate on Monday, Australian retail sales, and that Fed Chair Powell testifying to Congress on Tuesday. Wednesday brings Chinese CPI, EU industrial production, and probably the standout data of the week is going to be the US CPI data to watch out for those inflationary pressures, followed by US PPI on Thursday. And then Friday we get Chinese trade data, UK industrial and manufacturing productions, and we end the week with some notable data as well, US retail sales. I'm going to wish you all a great trading week. Stay safe out there. Don't forget to hit that like button if you like what you're seeing. And don't forget to also follow us on our YouTube channel. And I'll be back with you next week for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.